One thing I've learned after nearly 30 years in property is that behind every property transaction, there's a story, a big decision, and often a lot more emotion and complexity than people expect. This podcast is all about giving you access to the people, insights, and strategies behind smart property decisions so you can make better moves, whether you're buying your first home, investing, selling, downsizing, or planning your next step.
Welcome back to the Melbourne Property Brief with Warwick Brooks. Today, we're diving into the numbers, the trends, and data shaping Australia's property market. More importantly, what they actually mean beneath the headlines. Because one thing I find fascinating is that the data often tells a very different story to what people are hearing in the media. With affordability pressures, changing buyer behaviour, supplier concerns, interest rate conversations, and major policy discussions continuing across Australia, there's certainly no shortage of things happening in the property market right now. I'm joined today by Gerard Burg from Cotality. Gerard is an economist who specialises in translating property trends and market data into insights people can actually understand. Cotality, formerly known as CoreLogic, sits behind a huge amount of property data, research and analytics used across real estate, banking, valuations and property industries every day. Gerard and the team are often seeing behavioural shifts in market movements before the broader market even realises they're happening. I think this is going to be a really fascinating conversation. Gerard, thanks so much for joining me.
Thanks, Warwick. It's great to be here.
Gerard, before we dive into the market itself, can you tell us a little bit about your role at Cotality and your background in property economics?
Yeah, well, I guess my role is to really sit in front of the data, and communicate what we find in the property market out to stakeholders in the industry, the media, and the wider public as a whole. We look at conditions in the underlying economy, look at what that means for buyers, what it means for sellers, and try and just translate a lot of the technical jargon into things that people can really understand. My sort of history in property economics specifically is reasonably short. I have a long career as a macroeconomist looking at the kind of big picture. So prior to joining Cotality, I spent the previous 20 years at National Australia Bank. And given the importance of property within, I guess, the banking sector in Australia, I always had a bit of a focus within there, particularly when we were out speaking to clients about what was happening in the property sector. I'd usually do a presentation, half hour to 45 minutes, where I was, looking through the big economic trends and spend about 5 minutes on the property market at the end. And that was the bit that most clients were most interested in every time I was speaking. So that was kind of the intro into coming into Cotality.
Yeah, great. I mean, property data would have been a very big thing at the Commonwealth Bank, considering their portfolio.
Yeah, well, all of the big four banks are very heavily focused on property, and now sitting on the other side of the desk, we have obviously very close relationships with each of the big four banks and then other lenders as well.
Yeah, great. One thing I find fascinating is that your team is often seeing behavioural shifts before the broader market even realises they're happening. What does Cotality actually do behind the scenes, and how much property data are you analysing day to day?
We sort of absorb so much data from all over the country in terms of different segments that might be producing insights into the property sector. So obviously close relationships with the Valuer General departments around the country that are ultimately the source of truth for all things related to property transactions, but also tie-ins with real estate agents and other sort of interested parties, obviously the banks as well and lenders. And the fortunate thing is I don't have to do too much of the direct analysis of that raw material. We have a team of amazing data scientists who sit behind us, who process the data, clean up all the noise, and help us really pull out the clear signals that we can get out of the data so that we can actually bring something of real value to the broader market.
Yeah, great. And I think this is kind of, for people, especially in real estate, who probably do know about the Cotality name change, but for people who don't know, Cotality was previously CoreLogic, and it has been CoreLogic for a long time. What was the name change for?
Yeah, so I think one of the things that people perhaps aren't aware is that Cotality is actually an American company. So it was a decision made at headquarters to make the name change. I think while CoreLogic had a lot of brand recognition, I think to someone outside the property sector didn't necessarily tell them a great deal about what it was that we did. The sort of logic of bringing together a modern corporate name, I believe the decision was the co-part reflected the cooperative nature that we have with our partners across the industry. It was then totality to sort of sum up that we cover the entire breadth of the property market, and vitality as well to sort of say how much we bring the data to life. So that sort of explains the background to the name.
It's a good name for it then.
But we're still facing the reality that a lot of people didn't necessarily pick up on it. And so personally, I feel like I'm on a one-man mission every time I'm out with clients to sort of explain that, oh no, we made that change.
We use your platform every day, and people in our team still go talk to us CoreLogic, and we keep kind of half people saying Cotality, half on CoreLogic. So we're slowly getting across there.
I think it means my mission is not accomplished yet.
One thing I really find interesting is that the headlines and the actual data can sometimes tell very different stories. Do you think there's currently a disconnect between media narratives and what the numbers are actually saying?
I think when you look at the media perspective on the property sector, I think it's very narrowly focused. And I think it's true across economics more generally that there's no conditions that are universally good or bad. People often have perspectives on an individual economic statistic and think that means something specifically good or bad, but it's actually a kind of a neutral thing. It impacts people in different ways. And so I think that's true of what we're seeing right now in the property sector as well. A classic example, I suppose, is the headlines that Melbourne has lost its crown, that, it's underperforming. And certainly if you take an investor's point of view, that would be absolutely true. For example, you're looking at the market from the perspective of a first home buyer, probably cheering. You see that your dollars go a lot further here in Melbourne than they do in, say, Brisbane or Perth or Sydney. And I think that perspective that there are different sides and different angles often gets overlooked.
Going back onto that Melbourne point is that a lot of investors in the last 12 months have left the other markets because they do perceive that Melbourne is potentially in a situation that historically has not been, and that they're banking on the fact that it may return to its position in the leaderboard. But it's going to be really interesting to see how that kind of pans out.
I think that's a realistic outcome that we could see in coming years. I think there has been some broad negativity, and again, some of that coming from media perspectives about Melbourne as a whole. But the demographic trends that we see in Melbourne, I think, are encouraging towards perhaps regaining that position in the leaderboard. And particularly over the longer term, we're seeing that affordability advantage being something that could draw a lot of people to the city over the next 5 years or so.
Yeah, well, I think our government hasn't helped with their land tax positions and just in general where people perceive Melbourne. But hopefully that, does turn around for a lot of people.
Yeah, I think the investor side of things, as we say, those sort of have been discouraging. But again, the contrast of where the headlines have put things versus perhaps what you see in reality, there's been headlines that Melbourne has been uninvestable, that it's just impossible to. And I think the most recent data that we've seen in terms of investor share of lending, for example, just trending higher, yes, lagging behind the national average, has sort of pointed to that being, a little bit overblown to where things have been. And of course, the latest budgetary changes sort of probably upend the entire investor picture across the country and will sort of really change the picture quite significantly.
That's another story that's going to take a little time to unfold and see the data coming through, but it's going to definitely have an impact. One of the things that I think a lot of people are surprised about is the fact that Adelaide has overtaken Melbourne for the first time in history. Is that largely a supply story?
It's all like the relativities of supply and demand in each of these individual markets. When you look at what's happened in terms of the supply of new housing over the past few years, I think it really is quite instructive as to what has happened over this period. So when we look at the amount of homes completed, start of 2020 through to Q3 of last year, the most up-to-date data available from the ABS, around 1/3 of that total number of houses completed was here in Victoria. And there was a strong bias towards the standalone house, that clearly there's still this revealed preference that a lot of buyers still have for the traditional home with a backyard. So that delivery of supply into Victoria, and obviously specifically Melbourne in a large extent, has really helped keep that lid on the overall increase in home value growth over that period. Whereas Adelaide and South Australia more generally, the period during the pandemic, we saw a lot of flow of people into Adelaide, whereas previously it's been a place that people often left, particularly sort of younger workers moving for opportunities on the East Coast. It was a significant reversal of what the longer term trend was, helping to push up that demand in the city. Supply was somewhat inadequate to meet that demand, and we saw the consequent increase in home values that's really pushed Adelaide much higher. When you look at the sort of broader story of Adelaide being a city of 1.5 million people or so versus Greater Melbourne pushing up above 5 million, it's a very different market. And I think what we were talking before around what might be the natural order of things longer term, I don't know that it's sustainable.
Yeah, so just on the kind of, you mentioned about how the Victorian has kind of led the way in housing supply. Do you think that will become Melbourne's advantage in the future?
Well, it's definitely made Melbourne much more affordable, as we've said, than other cities. There's a lot of anecdotal data, and unfortunately anecdotes is often some of the stuff that we have to rely on in these sort of things, that people priced out of other markets around the country are increasingly looking at Melbourne as being somewhere that they might see a viable option, particularly given, again, the size of the city and the employment base. Not going to be missing out on income moving to a city like Melbourne, and that income to cost basis just becomes much more attractive. So we can see a scenario where demand significantly picks up within Melbourne above the sort of levels that we've seen over the last 5 years or so, just built on that affordability advantage that the city has.
Yeah, and just going to on the supply side of things and the increase in construction costs. And I mean, we know because we're looking at sites that essentially it's very difficult now to get any development to stack up to make profit. The developers are not going to be building. The building costs have gone up a lot. We can't get enough trades to build the houses because a lot of them are getting paid a lot more on big build projects. And what do you guys see I personally don't think we're going to be able to build the houses. We just don't have the ability to do it. What kind of impact do you see that's going to have in 5 to 10 years?
Well, in the short term, I guess it really puts a floor underneath any potential downturn that we're seeing right now, because there's just a limited ability to add to the stock of houses. And it's where the affordability advantage that Melbourne has from the demand perspective is lost on the supply side. Because if you're looking to build a house that costs roughly the equivalent amount, no matter which major city you're looking to build it in, you're probably not going to look at Melbourne. You might be looking much more at, say, Brisbane or Sydney or perhaps Perth. Although Perth has its own trade issues, I guess, getting access to the construction labour. But those other markets where those values have risen so much more rapidly become a much more feasible option for builders to be undertaking construction than Melbourne is right now. It's another factor that when you see that affordability, the potential demand side benefit that Melbourne has, it's quite constrained on the supply side of new buildings, and therefore can potentially see that reversal of the trend that we've seen most recently. Yeah, it's definitely a path forward.
Yeah, I also think that if you're looking into what the government are proposing with that, if you want to invest in property, they're pretty much only letting you buy new builds. I feel that the only thing that's going to do is put the prices up. If these developers are going, well, investors have only got this option, therefore I can charge more for that, which is going to just put more pressure on first-time buyers. It's going to be really interesting to see how that kind of plays out as well.
Yeah, I think it's one of those ones that it's not clear until we get some real data on what's happening that we'll really know what's going to happen. I think there's a range of scenarios, but I think overall investment is definitely going to be discouraged by the policy. We've seen for such a long period of time that investors have preferred existing stock over new builds. New builds carry with it a certain amount of risk, I guess, that perhaps they previously had been avoiding. But it'll be interesting to see how development changes from this sort of policy. Particularly, I think the challenge of providing rental stock within the kind of inner and middle ring suburbs of our cities. Well, there's still the potential of knockdown rebuild of obviously not a single property if you're knocking down a single and you can't replace it with a single.
That's an expensive exercise.
It is, yeah.
And in reality, it's going to somewhat do the opposite. It's going to make the rich richer because the people that can afford to do that are already wealthy.
Mm-hmm.
Your mum and dads who are trying to get ahead in life, it's just out of their scope of being able to do that.
Yeah.
And I think that it's going to, in these inner ring, we've lost so many inner ring properties already in Victoria due to land tax and people selling, and most of those houses are being sold to homeowners. They're not being resold to investors because a lot of them are, even from a compliance perspective, a lot of them are, the compliance is getting too difficult on older homes. I think that what we're going to see now is a lot more of those still selling, and we're just not going to see enough new stock come into these areas for the amount of people that want to live in there. And if you go and look at what the government are trying to achieve, the new house and land packages are 40, 50K from the CBD. In my opinion, the younger generation don't want to live there. So your first-home buyers are not going to just go, okay, I'm going to go live out there. I want to still live in the city. And they want to live there, so they've got to rent. Mm-hmm. I do think, there have been a lot of articles, but I do really think it's going to put a lot of pressure on rents going up. But we'll see.
Yeah.
So do you see, like, Australians and property pre-COVID to now, different behaviours?
Yeah, things have evolved, I guess, in terms of what a lot of buyers have been demanding. We certainly saw in that early stage of COVID the real demand for greater space. We saw a significant downturn in the unit sector, particularly the smaller unit stock. People were looking for room for a home office or, room for just even a little bit more space. So when they're limited in what they can do elsewhere, their home was a bit more of a castle. I think that has persisted a little bit. The thing that's going to be interesting, I guess, from the kind of rental side is if we start to see a bit of a shift around the size of occupancy within rental stock, because that certainly took a significant downturn during COVID as well. It's a much more increasing trend towards living alone and then just smaller household sizes within rental homes. But now we're seeing that obvious pressure from rising rents once again. Rental affordability is becoming increasingly stretched across the country, that potentially people might be reevaluating what their needs are, what they can afford, what their wants are, all sort of coming together to change the shape of those households going forward.
Be just to get your take as well on kind of, as buyers these days have got so much information. There's so much data available to them. You guys are a data powerhouse. There's a lot of smaller players coming into the market trying to be different, and data can be interpreted differently. And what we've seen in our industry is an explosion of buyer advocates, buyer agents, especially younger ones without a lot of experience, who are on kind of, they look at data or they read something from some of these smaller companies and they twist it to mean a certain way. How do you kind of see that all of this data available, but it's not kind of being read the right way and being thrown out there for the benefit of not the consumer, but I suppose for what they want to kind of direct people into?
I think it's the risk of too much data becomes noise, and it's where you're really looking for clear signals out of the noise. And yeah, I mean, there's definitely associated with that. I think it's also where buying a house is a high emotion sort of purchase, isn't it? It's very high value, but it comes with that high emotion. And I guess anytime there's that sort of scenario too, it adds a bit of risk. And I think that probably explains a lot of the growth in things like buyer advocates, just in terms of people want to try and get a bit more sense of what is the real value, what is the signal that they should be looking for, rightly or wrongly. It can be that challenge. I think to my own home buying experience, which was going back many years now, but definitely my wife and I made it on high emotion. We put in an offer sort of before we even really knew much about the area. And fortunately, we made a very good choice. But, it was definitely an emotional one over a very rational, what, an economist would pride themselves on, making a very sensible, reasoned decision.
One area that is generating a lot of discussion at the moment around kind of our circles is Melbourne apartments, particularly newer builds. We've seen many owners experience limited growth and a lot, even losses over 15 to 20 year periods. What's the data kind of saying about the future of that market?
Yeah, I think when you look at the losses that have been incurred, they're very localised in sort of key segments of the city. So the Melbourne CBD, for example, we saw a peak in unit values there back in about March, I believe it was, of 2017, and values have sort of slid from that time onwards. When you look at sort of the broader story around, profit and loss in terms of home ownership, holding a property for about 10 years tends to be the median that we see across the country, and it generally results in a strong outcome. But as work out from that little piece of data there, you'd be making a loss out of the Melbourne CBD over that time period. So it's a bit of a different situation. There's also been weakness in Port Phillip and in Stonington West. And the thing that sort of brings them all together when you look at it is rapid increase in stock.
Yeah, the supply increases.
Yeah, when there's sort of, and I guess that is the nature of apartment developments, that they'll often be large scale, very lumpy, so add a lot of stock in a very quick amount of time. And sometimes it's faster than the market overall can tolerate.
Yeah, I think a lot of people also don't take into consideration the government changes to planning. A lot of people invested in apartments prior to 2017, and kind of after that, they really increased the supply. They changed what they would allow in different suburbs. And we saw areas like, Stonington, Burundara, like Hawthorne, for instance, like Belt Road, just was crazy. Like big block after big block. And it's made a massive oversupply, which is similar to what the CBD is. And it's going to be interesting with the new zoning of activity centres, where they're wanting to even push that supply further to see whether or not it's going to continue kind of pushing out that lack of growth in that segment. Do you think some parts of Melbourne are becoming undervalued compared to the rest of the country?
I think when you look at that sort of longer term path of where Melbourne as a whole is likely to go, we were discussing before, I think there is sort of large chunks where those areas that are relatively more affordable really are likely to see some pretty substantial growth over a longer term period. And so it comes to, I guess, proximity versus value sort of equation between them. I know when I look at a map of Melbourne, we often will show clients a heat map, and you look at this sort of sea of colour of high value across the southeast and eastern suburbs, obviously, but in a sort of similar radius swinging round to the west, and you see Footscray as a pocket where there's sort of still comparatively more affordable, perhaps still has a little bit of that negative association from its history. But I think, proximity and sort of value and cost will just continue to be a story. I think going back far enough, when I first moved to Melbourne, Richmond still had a bit of a downtrodden attitude to it. And then, sort of Fitzroy still did. And those gradually disappeared as gentrification continued through the area. And I think that's still sort of one of the big forces that leads to substantial value growth over time, is that story of gentrification. And so even as you get into sort of, the middle ring in Melbourne, I guess, stretching from kind of the north through the west, there's still comparative lower value across that than, if you go the same direction to the east. That's still where I think, you see probably the greatest amount of growth.
Yeah, I agree with that. So it's been a lot of conversation following the recent budget around negative gearing, capital gains tax, and what that means for investors. Pretty early on since it's happened. Not sure if the data is starting to see any sentiment behaviour or yet, but kind of when will we start to be able to see some kind of conclusive data to see any shifts?
Yeah, I think this is one where, again, it's signal and noise, and suddenly it's been something that we've been quizzed very heavily over the last week and a half, I guess. We sort of flagged that the immediate results coming out of auctions from the following weekend was that Sydney was much weaker and Melbourne was a little stronger from a clearance rate perspective. But we definitely weren't hanging our hat that was a story. Mm. It was the strongest investor market versus the weakest investment market, or alternatively, strongest first-home buyer market in Melbourne, having different results sort of immediately after this policy change. Perhaps it was something, but perhaps it wasn't. And it's this thing where we have to kind of wait and see. We're doing our best to see if we can find something in the data that can really reveal something a little sooner. But, it's hard data on investors' borrowing activity, which often comes with such a lag, is perhaps where we'll see the first definitive proof that something has been changing. But yeah, we're working as feverishly as we can behind the scenes to try and bring something out a little quicker that might show some real insight.
So there's also a lot of focus on when the Reserve Bank meet next. From your perspective, how sensitive do you think the market is to the interest rate movements?
I think it's different segments that really feel these interest rate changes much more significantly, and it's particularly first home buyers. When you've got a limited budget to start off with, when you're at an earlier stage of a career where you're a bit more dependent on those repayments and how large they are, and just borrowing capacity as well is hit by it. So I think that's really the segment that is most impacted. We've been looking at first home buyers in a large extent over the last few months, just following the changes in government policy again to provide them with the boost, the 5% scheme. But that has appeared to start to fade as we've now hit the third rate rise this year. So I think that's sort of counteracted the benefit that they'd previously received around the deposit scheme.
Yeah, it's really interesting. Like, they want first homeowners to buy properties, but every time an interest rate comes through, their borrowing capacity drops and it just makes it harder for them. Do you have a prediction on what's going to happen for the next one?
I think the most likely scenario at the moment, and that's assuming that we don't get a surprise in inflation data, is that this might be a hold. Increasingly, the market pricing is pointed towards that, particularly following the unemployment data that came out last week, and that it moved up a little bit higher. That may give the Reserve Bank enough confidence to say, we'll sit and wait and see where the data takes us. The challenge, I guess, that we've seen so far is that there's always that long lag between the full impact of a rate rise really hitting the economy versus how quickly they can have a meeting. There's estimates that it's in the range of 12 to 18 months following a rate increase that you actually see the full effect. So 3 and 3 meetings hasn't really seen enough time to show what's happening in the real economy as a result of this. So if they get an inflation read this week that looks a little bit better, or at least gives them enough comfort that things aren't going completely out of hand, I think then a hold is on the cards.
What trends do you think people will look back in 5 years and which they'd paid more attention to?
I think anything, again, we were talking about that sort of emotional side of things, and acting with emotion over a sensible, reasoned decision is probably the main side of things. That includes sort of perhaps delaying a purchase now in a scenario where we're seeing the market on the cusp of a downturn nationally, already a couple of months progressed here in Melbourne. But if you are looking to hold a property for a long enough period of time, the slight movements of a downturn, perhaps missing the bottom of the market, but in doing so, missing out on a property that really appeals to you, is the risk. I think too much focusing on those dollars and cents at the point in the cycle, when opportunity knocks, you need to take it and look through the cycle rather than the short-term ups and downs.
I think what today's conversation really highlights is just how important it is to look beyond the headlines and understand the broader story behind the numbers. Markets move in cycles, sentiment changes quickly, and sometimes the opportunities or risks aren't always where people assume they are. Gerard, really appreciate you sharing your insights and helping break down some incredibly important trends shaping the Australian property market right now. Thanks for listening to the Melbourne Property Brief, and don't forget to subscribe so you don't miss the next episode.